Have you ever thought how, in a few years, you could live off of Tesla stock? These days, a lot of people think that buying the top EV firm stocks will allow them to retire early. This is one that you most definitely don't want to miss. For a variety of reasons, people invest their hard-earned cash in profitable ventures, but the primary motivation is usually the desire for financial independence. It may seem unattainable, but becoming a millionaire in the stock market is not unattainable. Not everyone will be able to reach this objective, though. You increase your chances of creating long-term wealth by investing regularly, making wise decisions, and staying in the market as long as you can. One of the best methods to make money in the world is to invest in the stock market. The fact that there are numerous ways to benefit from the stock market is one of its main advantages, but there is a significant danger associated with the enormous potential gain. Now, the question is, out of all the valuable stocks in the stock market, why invest in Tesla stock? Tesla, though, is more than just an automaker. Many experts have said the assertion may become dated soon, yet it is accurate. In addition to making cars, Tesla is a manufacturing, energy, utility, robotics firm that saves lives, an artificial intelligence company that is quickly set to upend the largest industries. In fact, a lot of people think that Tesla will overtake all other companies as the largest in the world in the next years. It should come as no surprise that the majority of Tesla devotees typically offer their own prediction models for the company stocks, even though it might be quite a leap for others. Among them is Ken, a YouTube content creator who left the platform at the tender age of 38. According to his bio, I tried it all from employee to running a few companies. My retirement was facilitated by my stock investments and selections. Helping individuals attain financial freedom is my passion, my aim, and my love. He discusses disruptive stocks, multi-baggers, stocks to buy, and anything else related to money on his channel. He also breaks down complex data in his estimates, accounting for addressable market, revenue growth, and free cash flows. In his base assumption, Tesla's value by 2030 will be $4 trillion. By then, he values Tesla at $10 trillion in his bull case, which is presumably why he primarily concentrated on a straightforward $4 trillion valuation that takes share dilution into account. In his worst-case scenario, Tesla is expected to trade at $4,100 per share. He stated, "My bull case is $11,700 and bear case is $4,100 per share," in reference to his 2030 Tesla estimates. Most projections will take the midline, but I'm taking a price target of $6,900 nearer to my bear case, giving a higher margin of safety, he stated. My approach is a conservative approach to give a higher margin of safety. FIRE stands for Financial Independence, Retire Early, and it's a trend in finance characterized by high savings and investing, as well as frugal living. FIRE advocates want to retire early and live off small withdrawals from their amassed savings by saving up to 70% of their yearly income. The FIRE movement advocates for an early retirement and financial independence. In the 2010s, the concept gained popularity among millennials, in particular thanks to material shared in blogs, podcasts, and online discussion forums that helped it establish traction in online communities. Living within one's means is encouraged by this approach in order to free up funds for an early retirement or part-time employment. You can become work optional sooner if your savings rate is higher and you save a larger portion of your income than you spend. For the avoidance of doubt, FIRE is not a dividend play. The majority of dividend stocks barely move at all. When you invest in strong growing firms, your capital will increase faster than the income you receive. You sell stocks to pay for necessities. For instance, if you invest $400,000 and it grows at an annual rate of 8%, keep in mind that in this case, 8% was deemed to be benchmarked to the index with an additional margin of safety. You can take out what you need at $2,800 per month for 30 years, even as your money is growing. You will still have $201,000 at the end of 30 years because the invested capital keeps increasing. If, however, you were to withdraw a larger amount, let's say $3,500 each month, you would have exhausted your funds in just 18 years. People naturally have diverse wants, and as a result, they live varied lives. After retiring early, a person's cost of living has a significant impact on how long their money will last. Apart from lifestyle, one's place of living is also quite important. Every country has a different cost of living, and for computational purposes, an additional 40% is added to the cost of living to allow for a pleasant, to use the phrase loosely, lifestyle. Retirement lowers a person's cost of living. It will be less expensive to travel and interact with others. The cost of living decreases when one retires, albeit this varies from person to person. Remember that there won't be an income tax. Accordingly, Tesla is a fast-growing software and manufacturing company that is currently growing at a pace of 40 to 60% each year. By the time Tesla reaches maturity, experts predict its growth rate to resemble Apple's, which is still quite high at roughly 20%. Once more, take notice that extreme margins of safety were considered in the following computations. Nevertheless, the majority of retirement estimates only require 15 years. The typical lifespan is to work until 65 and then enjoy retirement till 80 years old. That's still too short for calculation's sake, though, which is why people have been wishing to retire early so they can enjoy life to the fullest without having to labor themselves into the grave till they're 60 years old. And that's when stock investment enters the picture. The cost of living varies per city. As was previously mentioned, the cost of living is essentially the same in the US, the UK, and Australia. It is estimated that $375,000 will allow one to lead a very comfortable life. Investing $375,000 in Tesla stocks will yield satisfactory returns of 8% annually. Upon reaching the 30-year mark with $375,000 invested, a $1,951 cost of living, keep in mind that an additional 40% is added for a comfortable lifestyle, and $2,731 monthly withdrawals over the course of the next 30 years. Your total will be $30,726. This means that at $6,900, 54.34 Tesla shares are required. In the worst-case scenario, 91.46 shares of Tesla stock will be required for a very comfortable retirement with a large safety net. With its astronomically high cost of housing, Singapore is regarded as one of the most expensive cities in the world to live in. Depending on your spending, you'll need either 60 or 100 Tesla shares to retire in Singapore. Now, one could argue that the cost of living in Germany, the Netherlands, Hong Kong, Sweden, and New Zealand is comparable to that of Canada. $325,000 for a standard of life in Canada with an average yearly return of 8% and a cost of living of $1,701 plus 40% is $2,381. Over the next 30 years, you will be withdrawing $2,381 every month. $55,566 will be your final amount at $6,900 per share. In 2030, you will require 47 shares, or 79 shares if the stock price stays low. Less Tesla stock is required in other Asian nations in order to retire early and take advantage of the beach's sun. Ken says that in this new period, you can live off of Tesla shares. Not only will Tesla survive, Tesla will thrive, he stated. He added that risk management is crucial and that there is danger in everything. He stated the risk of Tesla going to zero is close to none. Overall, the information provided suggests that investing in Tesla stock has the potential to make you wealthy and eventually enable you to retire sooner rather than later. However, nothing is certain because there are economic variables that could cause the company's stock price to increase or decrease. The good news is that your money will last for a very long time because Tesla shares will increase in value over time if the company continues to perform well. For investors who wish to retire early, buying Tesla stock is currently arguably the best option. According to Adam Jonas, the business has won the race for electric vehicles. According to him, Tesla is leading the electric vehicle race as it currently exists. He wrote, "Consider the EV race as a marathon at mile 21. Tesla is leading the way. All the others are either at mile 2 or are still lacing their shoes. For additional information on using Tesla stock to fund an early retirement, subscribe to this channel."